Hey everyone, I'm Yoshi from Zeni, and today we're talking about something that's quietly changing the way companies manage their finances: AI accounting. You've probably heard the term, but what does it actually mean? What does it look like in practice? And does it actually work? In this video, I'm going to do three things: define AI accounting clearly so you know exactly what you're evaluating, break down how it works under the hood, walk you through AI accounting inside of Zeni so you can see it in action. And if you're a founder, operator, or finance leader asking, should my company be doing this? This video is for you. Let's get into it. Let's start with the definition. AI accounting is the use of artificial intelligence to automate, analyze, and continuously optimize an organization's financial operations, including transaction categorization, reconciliation, reporting, compliance workflows, and strategic financial insight. Unlike traditional accounting, which is cyclical, manual, and reactive, AI accounting is continuous, automated, and proactive. So traditional accounting records history. AI accounting analyzes your financial data in real time and surfaces what you need to act on before month end, before the board meeting, and before the problem compounds. Now, you've probably also heard the term AI bookkeeping, so let me clarify the distinction. AI bookkeeping is the foundation, automatically categorizing transactions, reconciling accounts, maintaining clean ledgers, and AI accounting builds on top of that, adding reporting, forecasting, compliance, and strategic financial insight. AI bookkeeping keeps the books clean. AI accounting uses those clean books to help you run the business better. At Zeni, both operate together inside a single platform, and today I'm going to show you exactly how. Before we get into the Zeni platform, I want to quickly explain why this shift is happening, because it's not just a tech trend, it's a structural problem. Traditional accounting was designed for a different era. Finance teams spent weeks every month doing the manual tasks of categorizing hundreds of transactions by hand, running reconciliations across multiple bank accounts, chasing receipts and missing documentation, building reports in spreadsheets that are outdated the moment they are sent. And by the time the close is done and reports are out, sometimes 2 to 4 weeks after the month ends, the window to act on the data has already passed. And so now founders make decisions on burn rate they haven't even seen yet. And investors ask for financials that aren't ready. And month-end surprises happen because no one was watching in real time. That's the problem that AI accounting solves, not by adding more people, but by building better systems. Here's a quick comparison of the two models and how they differ based on what we just talked about. And you'll notice essentially the bottom line is that traditional accounting is built around the accountant's workflow, and AI accounting is built around the speed of your business. All right, now let me show you how AI accountant works inside the Zeni dashboard. What you're looking at is what our founders and finance teams see every day. On the left-hand side, you'll see your full finance stack: transactions, banking, spend management, and reporting, everything here in one place. Now I'm going to navigate over to the AI accountant. This is the engine running your month-end close, and it's the best way to see AI accounting actually doing its job in real time. The first thing you'll notice is the confidence score. This is a real-time indicator of how complete and accurate your month-end close is. So it's updated continuously as the AI works through your books. Right now, it's showing 21%. That just means we're early in the close cycle and there's work to be done. But here's what's important. You can see the target close date, for example, here, February 10th. You can see how many days remain, and you can see the performance trend over time. So you're not just looking at a snapshot, you're tracking improvement month over month. The first thing the AI accountant does is go through every transaction and figures out how it should be categorized. So now you might expect that to mean a list of transactions with suggested labels, but look at what's actually happening here. Let's take this one, for example. It came in as New York computers. The AI has looked at the transaction memo, it's cross-referenced it with known vendors, and it's recommending we reclassify this as Dell Technologies with really high confidence. It's not just giving you a label, it's showing you its thought process. The memo contains Dell Technologies. The California location matches Dell's known operations. The transaction type is consistent here with a hardware purchase. It's reasoning through this the way a trained bookkeeper would. You can confirm it with one click or override it, and every time you do either, the AI learns. It gets more accurate for your specific business over time. Once we reviewed and saved all 14 transactions, watch what happens to the confidence score. Next up, journal entry schedules. This is one of the most manual parts of the close, identifying which transactions need to be amortized or recognized over time, and then building out the schedule. The AI accountant has already reviewed your transactions and drafted these schedules for you. Now let's take a look at this one. It's a software subscription. It's categorized as a prepaid expense, 3-month amortization period starting January 2026, and the invoice is already attached. The AI has identified the category, the class, the amortization period, everything. The only thing left for your team is to set the posting date and confirm. And when there's something the AI needs your input on, like this one where the category was removed, it surfaces it clearly in a resolved queue rather than burying it. So you can see exactly what's missing and fix it in seconds. Journal entries that used to take hours to build are now a review and approve workflow. All right, so now we're on to missing receipts. These are one of those things that cause last-minute close scrambles. Someone forgot to attach documentation, you're chasing your team the night before, and everything just slows down. The AI accountant flags every transaction over your expense policy's threshold. So in this case, it's $75, and it flags the ones that are missing documentation. Uploading is super simple. You drag and drop your receipts right here, or you can upload copies of all your receipts at once, and the AI automatically matches them to the right transactions. You don't have to figure out which receipts go where. It does all of that for you. And now watch what happens to the score. So something that a lot of companies skip entirely is the flux analysis because it's so time consuming to do manually. You're comparing every vendor account month over month, looking for spending that looks unusual. The AI accountant does this automatically. It's already reviewed all your vendor accounts and surfaced the ones that need your attention. So you can see here the full vendor list, Amazon, Apple, Google Ads, and so on, with the current period spend, prior period spend, and the variance amount and percentage side by side. The ones flagged as pending need a quick review to confirm the categorization is right. This is the kind of work that used to take a senior accountant an entire afternoon, and the AI does it continuously. So by the time you're here, most of it's already done. The last step is bank reconciliation, making sure what's in your books matches what's actually in your bank accounts. The AI accountant has already handled 38% of this before you even arrive. You can see the accounts laid out. In this case, we have our bank balance, cleared balance, variances. The ones showing 0% variance in green are done. Citibank, reconciled by the AI accountant. We have Chase Bank here, which is reconciled by Ruby. It's easy to connect your bank, which we'll do here for the Zeni primary checking. AI pulls in all the bank transactions, it reviews it, and highlights any variances. So in this case, we have 49%. So let's hit review. What's great is the AI surfaces the specific transactions causing the discrepancy. So it's not just telling you that there's a gap, it's actually showing you exactly what to look at. So in this case, we have City Power Company charge. The AI is recommending that it needs to be categorized as utilities, which all looks good. So we hit save. This next one is a Gusto payroll debit. So the AI has already found 5 matching journal entries and has pre-selected the right one. So we just hit save. Once we've gone through all the bank transactions that needed our attention, we can reconcile the account. And this is the moment everything has been building towards. We started with a confidence score of 21%. We worked through every step and now created the month-end insights. This month-end close report is a structured summary of what happened this period, performance against expectations, anomalies surfaced, and the financial metrics your board and investors are going to ask for. This report is then sent out by Zeni's AI CFO. The AI accountant handles the close. The AI CFO handles the strategic layer on top. They're two parts of the same system. What used to take 2 to 4 weeks of manual work is now a guided step-by-step process that the AI is running in parallel with your team the entire time. Now, I know what some of you are thinking. You just watched the AI do a lot of work, and you're wondering, does this replace my accountant? And no, honestly, that's the wrong question. What you just saw wasn't AI replacing a finance team. It was AI clearing the path for a finance team to do their actual job. So every step we walked through had a human in the loop. The AI recommended Dell Technologies, a human confirmed it. The AI drafted the journal entry schedule, a human reviewed it. The AI flagged the reconciliation gap, a human resolved it. So at Zeni, the model is always hybrid. The AI handles the operational layer, which is the transaction categorization and vendor recognition. It's the journal entry drafting, receipt matching, vendor flux analysis across all the accounts, and bank reconciliation. And the finance team handles the judgment layer. So it's reviewing and approving the AI recommendations. It's resolving edge cases, the AI flags for human input. It's adding strategic context to the month-end insights and advising on tax, compliance, and financial planning. So the results isn't just a faster close, it's a clearer one because the AI is consistent in a way humans can't be when they're manually processing hundreds of transactions under deadline pressure. So AI doesn't replace financial intelligence, it creates the conditions for it. Before I close out, let me quickly address 3 misconceptions I hear a lot. What you saw today wasn't automation bolted onto a spreadsheet. It's a different operating model. So it's continuous instead of cyclical, proactive instead of reactive. The confidence score alone is something that doesn't exist in traditional accounting. Also, companies at every stage can benefit from this. Whether you're scaling fast or managing complexity across multiple entities, building on clean AI structured books means better fundraising readiness, cleaner due diligence, and financial visibility that drives faster decisions. Every action the AI takes is reviewable. Every recommendation is explainable. Every exception is flagged for a human to resolve. And you're not handing over the keys. You're getting a system that surfaces the right things at the right time. So let's bring it back to where we started. What is AI accounting? AI accounting is the use of artificial intelligence to automate, analyze, and continuously optimize your financial operations. So your business has real-time financial clarity instead of month-old data. And as you just saw, it's not a concept, it's a step-by-step process happening inside Zeni right now. Transactions categorized, journal entries drafted, receipts matched, vendors analyzed, accounts reconciled, and insights generated, all tracked by a single confidence score that tells you exactly where you stand. The companies that build on AI-powered financial infrastructure today are going to have a structural advantage over those still closing books manually. If you want to see how AI accounting can work for your business, the link is in the description. And if this was useful, subscribe. Every week, we'll have a video covering everything happening at the intersection of AI and finance. Thanks for watching.